Meta just decided to lay off another 8,000 employees, waking up before they can even open up their laptop. And corporate America is literally dying. I've never seen my Instagram feed as well as just overall doom and gloom, even though the market is roaring. We're gonna go over the SPY, where Wall Street institutions are parking their money, and trades that we have done throughout. Let's get started. We did dip a little bit more to 732, but we still closed higher and we're at 745.64 was the close. Pretty strong. Historically speaking, you know, usually holidays, we usually do get like a market rip. I'm filming this on Monday, Memorial Day. The market has just had an insane ripper. The volume it's a little bit below average, and now the stochastics, and you will not really see me indicate this that much, but as a trader, you know, I look at these things. The stochastics are flat, even though we're moving higher, and the volume is getting weak. So we're having less and less buyers at this level, because reality is kind of, you know, how much further can we really go? Now, 2026 is an anomaly. We have a midterm year, so the market can, of course, go higher and higher. Now, we kept on always saying that 2026 will be a stock picker's market, and it's definitely showcasing that. Now, a few things to know. This week alone, we have, it's kind of like a quieter week. We have some FOMC now. Kevin, he's been nominated and he's the new chair member. FOMC board members are speaking, and we have PCE coming in this week, all right? PCE, GDP quarter over quarter, and also, let's see, on Friday. So it's kind of like a quieter news week. Now, the other thing too, we'll kind of go through some other stocks too. So for instance, Google had an insane run, but there's a lot of sellers coming in. That is validated volume right there. A lot of selling pressure. Obviously, I kind of expected this. When Google is having this kind of a large run, you expect the market to kind of take a breather. And now it looks like it's taking its breather right now, as we clearly see here. But a trade that I want to analyze, because, you know, as the market, we have been going up because we had a lot of earnings that was just great results, which we expected. This is not anything out of the ordinary. We expected earnings to be like kind of kill it out of the park, and they really did. Of course, nobody just did nothing. It's crazy. They can just grow insane amounts and they do nothing. But one of the stocks that I want to call out, in our community, we called out DXCM, DXCM, and we called it out actually around week of April 27th, 2026. We saw tons of accumulation candles. And you also notice too, we have higher lows happening within it. We brushed the lower Bollinger Band. And then after last week, we had an insane move. This is a 4.5 risk to reward. Just an insane move. Now, this one required a lot of patience. And I will definitely say, trading has probably been a little bit more, what's the word? You have to be a lot more patient nowadays. If you want to work with me, link below. But DXCM was one of the stocks that was called out from our community, and just an insane number. And look at that bullish engulfing candle with the volume double the normal. That is a move. And that's what you're waiting for. And you know, you have to definitely be patient. I will definitely say, I feel like right now they are definitely triggering more stop losses more than usual. And it's funny enough, as one of our students in our academy, shout out to you, Alec, he paper traded and back tested, forward tested so much. He's like, this environment has definitely been a lot more difficult. And it definitely is. And as a trader, you get tested, and how you move forward is like, hey, I know the system, I have a process, and it's still working, but you go through struggle. And anyone who is a trader is a real trader. If you don't go through a struggle, you're not a trader, because it's not all rainbows and sunshine. One thing I want to note is definitely in rotations. I always talk about this as a coach. We always talk about watch where money flow is going. If you look at all the ETFs right now, we can see obviously XLC is dumping. Meta is not, it's kind of, you know, struggling in the 600s. Energy is down. It still looks like it's moving, but obviously with the Middle Eastern conflict, that's still ongoing and it's not purposely resolved. We're seeing energy prices spike, as well as crude oil is just flirting with the $90s to $100 per barrel. Financials is moving, and industrials looks like it's, you know, peaking, and then obviously we're already aware of big tech just moving up higher and higher. But this is definitely like, it looks like a rising wedge. It's getting tighter and tighter, and so I'm expecting a decent amount of a pullback, especially when we have a new Fed chair. Historically speaking, we usually do have one. Now, this is another thing that I find interesting. Sorry, I can't talk. We have consumer staples moving up. Sorry, this is XLP. Yeah, consumer staples is moving up higher and higher. That's heavily defensive. We also have utilities. It just closed above the 20 MA. We're having higher lows, and it's all buyers. Pretty much, you might as well just had a bullish engulfing candle. I know it's like a little bit of a wick, but literally all buyers, above average volume. That is sector rotation happening at its finest, and the market is, it's kind of pricing in like, hey, what's going on? A lot of times, historically speaking, before a market is actually labeled as a quote recession, markets will take time before that it really sets. Everyone's feeling right now is like, hey, I don't know if the job market's that good. I don't really feel great about my finances, or just like how the job market is. That feeling is real. Now, the data that we're seeing off of all this, Forex, the GDP, consumer sentiment, all that stuff, that can be changed. That is real. But what you're seeing on the charts is also saying there are some issues going on. So you should be putting on your thinking caps and wondering what the heck is going on. Healthcare also, we just broke out of consolidation. Most of the times when you're seeing the market rotating in very defensive nature stocks, healthcare, utilities, consumer staples, that is not a very bullish sign for all the stocks that have been running and pushing the market. So I would just always say, be very cautious. Right now, we are in a time where the market is pulling hard because of all big tech stocks. But reality is kind of kicking in, and it looks like Wall Street is kind of rotating their money out, and that's where we follow. If you want to follow me for more tips, like and subscribe, and I look forward to see you guys in the next one.